Hello, everybody. Welcome to this webinar brought to you by Bursa Malaysia. Our webinar title today is Outlook for Asia Markets. So my name is Shen Chu. I'm the moderator for this session. So in this session, we invited the esteemed speaker from RHB Asset Management to discuss with us what would be the impact of Trump policies, as well as the impact of China's recent stimulus package to the market. Now, before we begin, as usual, a disclaimer. Whatever we share in this webinar is only for educational purpose. In no way that I give any recommendation for you to buy or sell any listed securities that we mentioned here. If you decide to make any investment decision, you're solely responsible for all your investment risk. Now, allow me to briefly introduce our speaker today. He joined RHB Asset Management Private Limited Singapore in April 2018 as a Chief Investment Officer, where he is responsible for setting up the investment and research processes, team structure, investment strategy, and product strategy for regional equity products. He also oversees the Asia Pacific regional teams responsible for managing the different equity and multi-asset mandates. Additionally, he is the lead portfolio manager for key institutional and flagship retail equity and multi-asset portfolios. He is concurrently the Chief Executive Officer of RHB Asset Management Singapore, where he is responsible for the overall strategic development and the management of the Singapore office. He has over 24 years experience in the investment industry, managing multi-billion regional asset, Asia Pacific equity and multi-asset portfolios on behalf of sovereign wealth, pension plans, endowment, insurance, and retail clients. So he's none other than Mr. Tan Jitun. So Jitun, how are you today?
I'm great, Shane. Thank you for having me tonight.
All right, it's our pleasure. So I will just stop sharing my screen and hand over the control to you.
Okay, thank you. Okay, before I start, maybe a warm welcome to everybody who is joining us this evening. Thank you very much, Bursa Malaysia, for inviting us at RHB Asset Management to give everybody this chance to share our views on the Asia market. So the topic for tonight will be outlook for Asia markets when Trump 2.0 meets Xi Jinping's China stimulus. I think 2025 is shaping up to be a very, very interesting year for those of us who are involved in the markets. So this will be round two between these two formidable foes or frenemies or friends. So depending on how you look at things. So I think this will definitely be an exciting time for 2025. So let's talk about the market from two perspectives. I think the first perspective is Trump 2.0. So as everybody is well aware, I think this is the second time that Trump is in the White House. So once again, we would like to look into our crystal ball and try to figure out what are the possible policies that Trump may implement in his second term as the US president, and also more importantly, the market implications, right? Once again, I just want to highlight, we are looking into our crystal ball because obviously Trump is not in the White House, at least not until January of next year. So he has yet to appoint a lot of his key cabinet members who will be key in terms of pushing out all his policies. So once again, we are just trying to anticipate what possible policies may be implemented when he's back in the White House. And second of all, I think on top of Trump 2.0, we have this China stimulus, which was recently implemented. And I would say this is a major policy shift that we have seen in the China market. And our view is that the government put option was finally activated in September of this year. So these are, from our perspective, these are two counteracting forces that could be at work in the market in 2025. Okay, moving on. This is a chart or a map of the US, and you can see quite clearly here what are the states that is won by Trump and what are the states that is won by Vice President Harris. So we can see quite clearly that they needed 270 to win. And in the end, Trump had 312 votes. So I think it's a very, very strong mandate from the American people. I think what the market was very, very afraid of was a very thin margin from either side. But with this, I would say, comfortable win by Trump in all the six key swing states, I think there is no doubt in the minds of the American people that he has the mandate to lead. So I think this is very comforting to the market, and as a result, and the market was rallying post these results. I think more importantly, that very few people were actually expecting was the overwhelming win in the Senate and in the House as well. So this is going to be one of those rare events whereby the president is obviously Republican, and the Republican would have majority in both the Senate and the House as well. And that means that with Trump in the White House, it will make it very, very easy for him, or rather much easier for him to pass through all his policies and all his mandates, right? So with the overwhelming win and a red sweep in the Senate and the House. Okay, moving on. So what we're going to talk about today is some of the key campaign proclamations that Trump has made over the last few months. And what we are thinking of is what are the possible policies that can be implemented as a result of his proclamations, right? So we're going to talk about six this evening, okay? I think the key one, the first one that we're going to talk about is, I think he has indicated that he will cut rates. He will cut tax rates across the board. And not only will he extend the 2017 tax cuts, he might even lower corporate tax rate from the current 21% to 15%. And not only that, there were even talks that he might eliminate federal income tax as well. So all in all, I think we can expect to see a cut in tax rates in the US, right? Next, we can talk about deregulations, right? I think that was a key proclamation of his. He wants to deregulate the industries, right? Our view is that there might be a delay in Basel III for the banks, and that was why the banks have been rallying, because with the implementation of Basel III, they might have to increase the capital requirements for the banks. So if Trump were to come in and if he were to delay the Basel III implementation, that would be good for the banks. Second of all, he has talked about this a few times on his campaign trail. He will definitely ease regulation on cryptocurrency. As you can see, a lot of the cryptocurrency have been rallying once news of Trump rate sweep made it to all the major newspapers. And also, more importantly, he has talked about this a lot of times, and that he has, in fact, this was one of his key promises even during Trump 1.0, and that was to control immigration. Okay, he has promised the largest deportation in the history of the US, right? And obviously, he has talked about building the wall, and he might even think about further restrictions on immigrations. All right, so these are some of his key policies. And moving on, I'm sure all of us are well aware. I think Trump is a denier of climate change. He doesn't believe in global warming. I think it's possible that he might exit the Paris Climate Accords again, right? And he might also reverse limits on energy projects that were implemented during the Biden's administration. And also, more importantly, I think the markets are rallying because of this, is he might reverse the pause on issuance of new licenses to export LNG or liquefied natural gas to the rest of the world, right? So, and more importantly, I think perhaps a bit more controversial would be on his possible policies on electric vehicle, right? During his campaign trail, he has promised that he is going to roll back some of the auto emission standards, right? Because he felt that this is giving electric vehicles an unfair advantage. But if you look at what is happening over the last few months or so, it's quite clear that Elon Musk has been supportive of him and he has personally contributed financially to Trump's campaign. So that's why our view is that I think because of this Elon Musk impact, I think how much changes he might implement on the electric vehicle industry, I think we have to wait and see. So whether there will be a compromise from his very, very aggressive stance that he took in the earlier part of his campaign trail. And the fifth one is the resolution of armed conflict, right? I'm sure all of us are well aware. It might be possible that Trump may not further support Ukraine in the Russia-Ukraine conflict, right? So unlike Biden, who has been very supportive of Ukraine, if Trump were to come on board in January of 2025, would there be any possible changes in the stance of the US? That remains to be seen. And also, the other thing we want to talk about will be Israel and Hamas conflict, right? Would there be resolution, right? As all of us are well aware, I think the Biden administration has been very, very supportive of Israel during this conflict. So would there be any changes to the US stance? Once again, if Trump will come on board in January of next year, and would he make any possible changes to the stance of the US government? Last but not least will be tariff, right? During his campaign trail, he said that he would put at least a 20% tariff on all imports. So that's on all imports from anywhere in the world. So anything that goes into the US would attract a tariff of 20%. So that was what he said during his campaign trail, right? And more importantly, he did mention that he would have a tariff of 60% on all China imports, So that's obviously a big departure. Right now, on average, for some of the key parts of the China imports, they are attracting a tariff of roughly about 25%. So if you were to implement a 60% tariff on all China imports, that's going to be a big thing, right? But however, I think it remains to be seen, because that was what he said during his campaign trail. Whether when he's the US president, would he push through all his tariff proclamations remains to be seen, right? So I think the market is it's split on this. Markets are still wondering whether is this his negotiating tactic. Would he ask for 200% or 60%, and you wait for China or for Mexico to negotiate it down, right? Is it more buck than actual bite, right? So this is what the market is still speculating, right? So these are some of the 6 what I think are the key campaign proclamations that he made over the last few months, right? And some of the possible policies. Moving on, let's talk about what would be the possible impact on the macro environment if Trump were to push through on all the policies that we talked about earlier. Okay, the first one will be inflation. Our view is that if Trump were to push through the policies that or the promises that he made during his campaign trail, I think inflation is going to be much higher, right? The reason is because obviously with the proposed tariff hikes, it will increase costs for the Americans, right? If you were to put in a minimum of 20% tariff for any imports that goes into the US, and on top of that, a 60% import tax on all China imports, as you can imagine, right? US does import a lot of goods from all over the world. If the tariff were to happen, I think that will obviously increase inflation. So that's why I think the market is still on the fence here, right? The market is still thinking whether he will push through or he will carry out all his campaign threats, because it will have a very, very big impact on inflation in the US. Okay, next, the tax cuts that he has promised will likely be inflationary as well, because at the end of the day, there'll be more money to be spent that can be spent by people, by corporates, and a lot of that will go back into the markets in terms of spending. And as a result, it might lead to further inflation. Last but not least, if the deportation, as what Trump has promised, were to happen, I think that might increase employment costs across the board as well, because a lot of these immigrants, a lot of these immigrants, or those people who are in US illegally, they could have been in US for the longest time, but they don't really have the proper papers. They might be deported as well. So as a result, employment, especially in the blue collar space, right, might be impacted. So as a result, employment costs might go up. So in general, right, our view is that I think inflation might go up if Trump were to push through everything that he said. So that's why our view is that I think he will have to temper all this aggressive proclamation or the promises that he made during his campaign trail. Next, in terms of interest rates, our view is that it might be higher for longer. So the interest rate might stay higher for longer. One of the reasons is because if Trump were to implement the tax cut, it will lead to a already high US debt load to be even higher, right? So as a result of that, that might increase the borrowing cost even for the US Treasury, right? If the fiscal deficit were to go even higher, I think what investors would like to call the bond vigilantes might come out and say that, look, if your fiscal deficit is going to be higher, I think the investors would have to demand for higher cost, for higher borrowing costs. So as a result, interest rates might stay higher for longer. So as a result, our view is that even the US Federal Reserve may respond to that. They might adopt a slower and a shallower path for interest rate cuts. I think interestingly, from market perspective, right, before Trump had this overwhelming win and a rate sweep, market were expecting anywhere between 8 to 10 cuts, right, by 2025. But that has been reduced all the way from 8 to 10. Now it's 3 to 4, right? That's a drastic reduction in the number of interest rate cuts. So the market is already responding on the back of that. Next, let's talk about currency, right? If Trump were to implement all these policies, I think that might lead to a stronger US dollar. In fact, we are seeing it now. The dollar index, for example, right, has become a lot stronger in favor of the USD. You can see it very clearly even for the ringgit, right? Ringgit has depreciated against the USD. And also, it's not just the ringgit, but across the board. For most currencies have depreciated against the US dollar over the course of the last few weeks or so, when US made it very clear that Trump has the mandate, right? And I think that makes sense because, as I mentioned earlier, there might be the interest rate cuts might be more subdued because of the higher expected inflation, right? So if the interest rate cuts were to be more subdued, which means the interest rate might stay higher for longer, right? So that might help the US dollar, right, against the rest of the currency. And also, it's quite clear for Trump, it's always about MAGA, right? Making America great again. All this pro-US policy and this more protectionism will definitely help the Americans and therefore help the US dollar as well. So in general, I think the US currency will be stronger, right? And in terms of corporate earnings for the Americans, I think it might be higher in the near term, near term, but in the medium term, the results may be mixed. So why do I say that? In the near term, definitely tax cuts will benefit corporate America, right? And deregulation in the US will help the corporate US earnings, especially if you are in the small and medium cap category. So the smaller firms will benefit probably a lot more, right? Relative to the larger companies if the US were to deregulate further, right? Next, tariffs, right? What was going to happen to this corporate America if Trump were to push on with his tariff promise? At the end of the day, I think the tariff will hurt margins globally, no matter where you are. Because at the end of the day, right, tariffs are paid for by the American companies, right? By the American companies. So that will hurt margin because their cost of goods will go up. When the cost of goods goes up, for example, classic case would be if something that cost $100 previously from China, right? However, if Trump would put in a 60% tariff on that particular piece of goods, that might cost 160 or even more, as you can imagine, the price of good goes up, then the demand of that good will probably go down as well. So as a result, they might have to sell less of this, and margins will be hurt, right? So as a result, that is one of the possible negative impact from tariff. Last but not least, if interest rates were to stay high, I think it will impact borrowing costs all over the US. So as a result of this, I think they will have to pay more in terms of interest rates, and therefore the corporate margins may be hurt as well. So that's why our view is that in the near term, as a near-term impact, I think because of these tax cuts, deregulations in the near term, I think corporate earnings in the US might benefit, but the results will be mixed in the medium term because of the rest of the policies will also impact all these corporate earnings over the medium to long term. Okay. Moving on, like what I mentioned earlier, Trump doesn't believe in climate change. So he will obviously exit the Paris sorry. He will definitely exit the Paris Climate Accords and reverse the energy projects that was been the limits that were put on by Biden. So as a result, right, they will pump more. They will pump more oil from the US, and as a result, I think oil prices will be implemented as well. Okay. And moving on. Sorry, there's some technical issues here. Okay. So in terms of the fifth macro drivers that we're going to talk about is on GDP growth, right? GDP growth as a result of Trump policies, our view is that in the near term, once again, like corporate earnings, it might be higher in the near term, but it will be mixed in the medium term, right? I think overall, unfortunately, if you're outside of the US, I think global growth will be impacted. The reason is as follows, right? The US growth is obviously going to be supported by the pro-US policies in the near term. But however, this is a zero-sum game. If the policies are pro-US, means that it might be anti countries that are outside of the US. So as a result, outside of the US, I think growth might be impacted as a result of that. And what I mentioned earlier in terms of inflation as well, inflation is obviously going to impact whether you are in the US or outside of the US. So as a result, inflation might impact growth globally as well. And the other more important thing is this. So right now, it's obviously Trump is thinking about tariff as a policy that he can implement, right, or that he can push and punish and hurt the counterparties or his trading partners. However, obviously, this is also a two-way game, right? These trading partners may also respond by having tit-for-tat retaliation, right, in response to those tariffs that are implemented by Trump. So at the end of the day, right, if these trade tensions were to be dragged out, right, then I think US might be hurt in the end as well, right? And on the sixth point, in terms of geopolitics, right, obviously, I think all of us are wishing for less armed conflicts all over the world, right? And our view is that I think Trump has made it very clear that he's not supportive of wars. And I think the market is already thinking whether that might means that there might be a possible ending to the Ukraine war, and that might lead to a more peaceful Europe. But that remains to be seen, right? And however, I think the China-Taiwan tensions, I think it will be a lot more fluid, because in terms of China, I think whether it's Biden or whether it's Trump, I think both parties are united in their attempts to try to curb the rise of China. Okay, and in terms of geopolitics, I'm sure the Europeans are also wondering as well how Trump will treat them this time around, right? Because I think in terms of his first time in his office, it was mega, so it was Make America Great Again, and probably the other part of the slogan is at the expense of everybody else, right? So I think the traditional allies will look upon Trump 2.0, and they will probably wonder to themselves and what will be in store for them this time around. Will he, like what he says, impose tariffs even on its traditional allies? Okay, but last but not least, on the last macro driver on valuations, our view is that I think right now the market is reacting from a very, very US centric point of view. I think market is looking at it and say that I think US companies, the US market should benefit because of Trump. However, at some point in time, especially as time goes on and when policies are being pushed out, I think the market might have to recalculate the impact of Trump on the markets when tariffs starts to hit and when higher interest rate starts to hit the valuation multiples, right? So these are some of the key macro impact as a result of Trump's policy. Okay, the other thing I would just want to highlight to everybody is this. So on this chart here, I just want to highlight to everybody the impact of Trump tariff 1.0. Okay, so on this chart here, what I've done is I have plotted China exports to the US and ASEAN all the way from 2015, which was pre-tariff, all the way to 2022. All right, just a few years ago. Right. On this chart here, if you look at the blue line, the blue columns here, these are China exports to the US over a period of time. The green columns are China exports to ASEAN, right? So we can see 2015, you can see that there's a big, big difference between the exports, China's exports to the US compared to China exports to ASEAN. But if you look at the last few years, especially 2022, you can see quite clearly the China exports to the US is actually quite close to China exports to ASEAN. But if you look at it, right, if you think about it, does it really make sense, right? Are people in ASEAN consuming all these Chinese exports? All these Chinese exports, so much so that the exports to the US and ASEAN, it's almost the same percentage, right? So on the right, you can see China export to the US as a percentage of total China export. So right now, before the trade war, so roughly speaking, 20% of China exports were to the US. Right now, it's roughly about 15%. So before the trade war, China exports to ASEAN was roughly about 11-12%, but right now it's about 14+%, right? I think the logical way to analyze this data is this. A lot of China exports, even though they were to the ASEAN countries, may not end up with the ASEAN consumers, because a lot of exports to the ASEAN countries will be transshipped, or it may be value added within the ASEAN region before further exports to the end market, which is the US, right? So the point I want to highlight to you is this. Chinese saying is 上有政策，下有对策, means that even though there may measures, there might be countermeasures as well. So I think the market, the world is very fluid, right? The market will react, even though there are policies that can be implemented, but there are ways to get around this, right? As you can see, right? So the thing I want to highlight to everybody is, even though during the Trump tariff 1.0, the market is already reacting to such a big extent already, right? So this is the point I want to highlight to everybody. And moving on, let's talk a bit about the market view. So as a result of what I spoke about earlier, our view is that I think it's logical in the near term to be positive on the US equities. The stronger US dollar, the pro-US policy, right, is definitely going to benefit US equities, at least in the near term, right? And our view is that, right now, I think the market is quite euphoric. I think market is rejoicing the overwhelming rate sweep that Trump has enjoyed. And however, how long, whether this will last remains to be seen. Okay, the other thing I want to highlight to everybody is I think we are also positive on China. That might be a bit anti-consensus, that might even be a bit, a bit different from other people are saying. But our view is that right now, valuations in China is really very cheap. And on top of that is what we're going to talk about later, China's stimulus, which I think is going to be quite substantial and something that we have not seen for a long, long time. Okay. The other thing, as a result of all these policies, our view is that I think we should be positive on Singapore because of the defensive nature of the market. And obviously, I'm sure all of us are well aware of the AI trend. All of us are well aware of the technology structural growth story. And so as a result of that, we are positive on the Taiwan market because of the exposure to the technology stocks as well as the AI story. Last but not least, I think it's important for us to highlight this, that we should be cautious on some of the ASEAN countries. So as a result of the strong US dollar, if inflation were to come in as well, that might create a double headwind for some of the ASEAN countries, right? So these are some of the reasons why we like and why we are concerned on some of these countries in our parts of the world. And moving on, let's talk a bit about the China stimulus, right? But I'm sure all of us are well aware of the US interest rate cuts that happened on the 18th of September, and the US interest rate cut was quite massive at 50 basis points. And that was the first time the Fed starts to reverse a very, very aggressive interest hike campaign, right, over the last 4 years. So that's on 18th of September. That was the first time the US starts to cut, and then it was a 50 basis point cut. And I do think that that was probably the catalyst for what was about to happen next. And that's on the 18th of September, US cuts interest rate by 50 bips. And on 24th of September, about 6 days later, the China policy combo was announced. It was a very, very coordinated press conference with PBOC, with China Securities Regulatory Commission, and the National Financial Regulatory Administration. All these three major financial regulators in China came together and announced a whole raft of policy measures to support the economy, right? So that was a big deal at that point in time on 24th of September. So as a result of that, right, you can see quite clearly here, these are some of the headlines that came out after the press conference. You can see Reuters was saying that it was the most aggressive stimulus since pandemic. South China Morning Post said that it was to set up, to prop up the stock market. It was a policy bazooka, right? So all in all, the point I want to highlight to everybody, it was decisive and it was coordinated amongst all the different regulators. And that happened on the 24th of September, just a few weeks ago. And this is a summary of some of the policies that was implemented. One, and I will highlight through some of the more important policies which I think has a very, very big impact on the markets. One is obviously the 50 bips basis point cut in required reserve ratio, or RRR, and that will release roughly about 1 trillion into the Chinese stock market. And not only that, the Chinese government also said that if that is not enough, they might think about cutting another 25 to 50 bips before the end of the year, right? The other thing is property. On the property market, the regulators came in and said that they will trim all existing mortgages by roughly 50 bips. And by 50 bips, it translates to roughly about 120 billion renminbi per year in terms of savings for Chinese household. So as a result of that savings, I think the market is anticipating that the Chinese, if they're paying less in terms of interest, they might use that money and they might spend it, right? So consumption should benefit. And more importantly, I want to highlight this. The Chinese government also came in and said that they will cut the down payment for second homes from 25% to 15%. So 15% is the down payment rate for their first home. So right now, whether you're buying a first home or second home, it's the same, 15%, right? It's 15%. So it's very clear from government policy that they are definitely trying to support the Chinese property sector. Okay. The other thing I want to highlight is also the support on the stock market itself. Okay, they actually set up a facility to allow securities company, asset managers, mutual fund, insurance company to tap PBOC to buy stocks, right, in order to support the stock market. And more importantly, the central bank actually said this: if the first round of 500 billion is not enough, they may come up with a second round or even a third round, right? So from my perspective, this is obviously not normal, because not normal for PBOC to come up with even a policy to support the stock market. And not only that, they're talking about second policy or even third round of funds available in order to support the stock market. Last but not least, they also said that they're going to have a 300 billion refinancing facility for listed companies to conduct share buyback. So if you are a listed company and you buy back your shares, you can actually borrow money from the central bank at a rate of 2.25. So if you are a listed company, I think the math is fairly straightforward. If your dividend yield is more than 2.25%, then it makes sense for you to go and use that money to actually go and borrow from the government, right, in order for you to conduct share buyback. So that makes a lot of financial sense. So the impact of all this policy is this, right, that the government is directly intervening with cheap loans to support the stock market. And to me, that's a very, very strong signaling impact. So as a result of all this policy, my conclusion is this: on the 24th of September of this year, Chinese government finally came out with this policy combo that I think is very comprehensive, very decisive. Okay, and on 26th, which is 2 days later, Xi Jinping came out from a very unexpected political bureau meeting and said that he will support the economy. And that is obviously a rally cry for those investors in China. When Xi Jinping comes out and said in no uncertain terms that he will support the economy, so as a result of that, and the market started to rally, right? Once again, 24th of September, whole host of policy. 26th of September, Xi Jinping came out himself and said that he will support the economy. And last but not least, on 30th of September, the government once again implemented more property policy losing measure. And I would like to highlight the timing of this. 1st of October is the start of the Golden Week in China. So a lot of people will go out to travel, go back to their hometown. And they actually release a policy on 30th of September. Obviously, they timed it so that it will coincide with the October Golden Week holidays, right? We all know that a lot of these people will go back to their hometown to visit their parents, to visit their kids, right? As a result of all these policy measures, it's quite clear that the people themselves are big believers of this. So as a result, during this Golden Week holiday, they actually bought properties back home. Okay? Okay, and on the 8th of October, the very first day that China came back from their 1 week holiday, NDRC, which is China's top economic planner, had a press conference and announced that they will front load around 100 billion yuan worth of stimulus during the first work week after the week-long Golden Week holiday, right? So once again, I think all this will time, right? One policy before the holiday starts and one policy after the holiday starts. So as you can imagine, right after another, all the policies were being implemented. And a few days later, the Ministry of Finance came in. Ministry of Finance came in and they had an announcement in terms of property, local government debt, and also on fiscal deficit, right? They mentioned that they will support the property market and also support the local government in terms of their government debt, right? And I think the few points here I just want to highlight here was in terms of stimulus, right? The stimulus that that they're going to implement over the course of the next few months, right, is going to be quite substantial. And more importantly, people were looking forward to this. So typically in China, right, there's a self-imposed limit in terms of fiscal deficit that's roughly about 3%. And the market is anticipating that going forward, they might even bust that 3%. So which means the deficit might even be higher in order to support the economy. And the market took it very, very well. Okay. And last but not least, just want to highlight on a few things. A few days later, the government came out and gave the market what they wanted. The market actually was asking for a 10 trillion renminbi policy. All right. And a few days later, the market got what it wanted. right? So the government came out and says that they will lift the local government debt roughly about 6 trillion, and on top of that, they will allocate another 4 trillion to conduct a debt swap. So all in all, I think this is what the government promised and what the government indicated that they will do in order to support the economy. So the point I want to highlight to everybody is this, right? So all these key measures that implemented in September were across all the different fronts in terms of monetary, in terms of physical, in terms of property, in terms of equity market. And not only that, they were announced by the most senior leadership across all the different regulatory body. In my opinion, I think this is one of the most significant package that they have released in recent history in terms of the magnitude, the breadth, and in terms of comprehensiveness. So that's why my view is that I think the government policy put was actually activated on September of this year. So I just want to highlight on a few key things. One, in terms of the markets, I think I'm sure all of you have heard the saying, never fight the Fed. In terms of trying to invest in the US, I think the same thing could be said about China. Never fight the PBOC. The Chinese government is directly intervening into the Chinese equity market. So the national team has been buying. The national teams have been buying. On top of that, they're getting the mutual funds involved, insurers involved, brokers involved, they're getting the listed companies involved as well. And on top of that, obviously, they've been cutting RRR, the triple R, and all of this means that there have been massive liquidity that's coming into the Chinese equity market. And my view in terms of policy is this. I think this time around, it's different. I think there are rare policies that have been enacted for the first time in China for a very long time, right? There's direct support on the stock market, and not only that, there have been substantial consumption boost as well. Because obviously, it's not every day that you have the central government coming in and saying that they will support the stock market. But this is what is happening now, right? And on top of that, I think all of us are well aware, typically in China, when they try to boost the economy, they try to use infrastructure. They'll try to build roads, airplanes, airports, infrastructure in general. But this time around, I think they're going to boost consumption because they are trying to develop the consumption part of the economy. So I think this time around, I think there's going to be an increased focus on that. And last but not least, in terms of communication, the way these packages was unveiled to the market, I think has been very well coordinated. There were joint press conferences by all the different financial regulator. As you can see, all the policies all came out one after another. So obviously, I think this is all planned, right? So I do think that this time around, it's different. I think one thing I want to highlight is this. China retail investors are believers this time around. They are going into the market to buy stocks. They are also going to the market to buy property, right? So it's not just financial investors like ourselves, right, who are more convinced this time around. Retail investors themselves are buying stocks and property, right? And I'm sure all of you are well aware, these retail investors are residing in China. They're more sensitive to changes in sentiments and they can feel it, right? So I think this time around, I think retail investors are believers. And the Chinese corporate earnings have been recovering as well over the course of the last few months. You can see quite clearly on this chart here. This is the EPS or earnings per share of the MSCI China companies. As you can see quite clearly, over the last few months, from May onwards, it has been on an uptrend. So listed companies' earnings have been recovering over the last few months. And more importantly, I just want to highlight to everybody is this. I think position in China has been very light because due to overall pessimism. I think investors have been very, very concerned about China, and especially if you're residing in Europe or US because of maybe political differences, because of cultural differences, and definitely because of the US-China tension. I think they've been selling down China over the last few years, as you can see from this chart, all the way from 2021, which was the peak. Since then, they've been selling down over the last few years. And right now, position in China has been at its lowest that we have seen. And I think more importantly, right, because of this policy change just in China, I think a lot of global funds will need to buy more because of their underweight position in China, right? So that's why I think it's important to highlight that despite the recent rally, I think positioning in China across the board is still very light by financial or fund managers like ourselves. Okay, and for those of you who want to look at valuations, I want to highlight a few things here. The red line is the valuation metric or the or the price earning ratio or the PER of the US S&P 500. As you can see, from the S&P 500 valuation, you can see that it's relatively high. And the other thing more important I want to highlight is the bottom two lines. The orange line is the MSCI Asia, the Asia index or the Asia market, right? And the blue line is the China index. In the China index, you can see that China is trading actually very cheap relative to Asia, and also trading very cheap relative, obviously, to the US market as well. And more importantly, as you can see here, I've drawn this horizontal line, which is the COVID lows price earning ratio. So China right now is trading not far away from the lows that we saw during the COVID period. And you can see, typically, the Chinese market only spend a few days or weeks just trading below the kind of price earning ratio before it bounces up very aggressively. So at this point in time, I think we are not that far off from the lows that we saw during COVID. So the point I want to highlight is this: China is still very cheap, room to run, despite the almost 180 degrees change in terms of policy. Okay. With that, I come to the end of my prepared remarks for this tonight's presentation. Maybe right now I'll hand it over to Shane and we can take some of the questions that our participants have tonight. Over
Thank
to
you
you.
so much, Jitun, for sharing your view about both US and China policies impact the market. So if you have any question to ask our speaker today, you may write them at the Q&A box, not the chat box, so we can moderate this Q&A effectively. All right. Now, the first question I see on my screen is that is about India, right? Jitun, you share your view about China, about US, about ASEAN, about Taiwan. So the question here is, with Trump as the next US president, may I know what is the investment outlook for India? Should we consider this market in our portfolios?
Yes, I think the short answer is yes. I think India is definitely in the right place at the right time. So right now, even despite this US-China tension, I think India is growing very nicely. Their middle class is growing. They are at a stage of growth that China was maybe 10, 15 years ago, right? So I think it's a very exciting growth on its own merit. But on top of this US-China tension, or because of this US-China tension, I think China is in the right place, right? India is in the right place at the right time, because both Americans and the Chinese do want to make friends with India. So there will be a whole host of policies that they will implement that will benefit India. And obviously, because of this US-China tension, there will be this China plus one policy, right? I think India it's nicely positioned for the plus one, right? Some, as you can see, some of these electronic companies have already moved some of their manufacturing facilities from China to India, or rather, some of them may be building new facilities, not in China but in India. So I think once again, I think India is in the right place, right time, both in terms of the growth that we are seeing, because of where India is in terms of its developmental path, and on top of that, it's getting benefits because of this US-China tension. However, I also want to highlight one thing. India has been the investor market of choice over the last few years because of this US-China tension, right? A lot of money that should have or were in China were in fact diverted to India. So that's why I think India valuations, it's actually quite lofty right now. I think growth is still there for sure, but in the short term, they might face challenges. For example, challenges, right? If like what I mentioned earlier, US dollar were to strengthen, if inflation were to come back in, right? So India, we might see some softness in light of all these macro environment changes that I highlighted earlier because of Trump's election win. Okay, over to you, Shane.
Right. Thanks, Jitun. The next question is about China A shares and H shares. Despite all these policy bazookas by the government and the regulatory bodies, the A shares and the H shares are not really that impressed, right? Because the market went up, but then it started to retrace, right? So would you share your view on this?
Okay. I think we have to look at it from a few perspectives. One is if you look at the market rally from the bottom, right? From the bottom, which was roughly in about September period, the recent rally have been rather aggressive, anywhere between 30 to 40%, depending on the market that you are looking at its peak. Right. At one point in time, I think the China market was the best performing market in the world, right, in the world at one point in time. Right. However, we all know, right, if the market were to go up so aggressively within a such period of time, we're talking about a few weeks here, the market, logically speaking, would have to take a breather. So this is the breather that we are seeing now. Because the market cannot go up 30-40% within 2-3 weeks and with no profit taking. That's not normal. I'm sure all of us here have been in the markets for a long time. You know what I'm talking about. So what we are seeing now, I believe, is a healthy retracement, right? Healthy retracement whereby the initial euphoria is over. Those hedge funds who have been shorting the market have to cover their shorts at no matter what cost it actually cost them, and that obviously caused some of the spiffier or the more speculative stocks to rally very aggressively, right? So the first wave was a lot of short covering, and subsequent to that, then we have the retail investors all coming in. But I think right now, I think there's a more, I think cooler heads have prevailed, right, at this point in time. So people are looking at the data and trying to assess the situation. So the market has retraced, but I do think that gives us a good entry level. And more importantly, right, when the market rallied 30-40% within a short period of time, the Chinese government actually came out and told the market to cool off, right? So the Chinese retail investors are also very, very sensitive about this kind of messaging from the government. So obviously, no government in the world, no central bank in the world would want the stock market to rally 30-40% in a few weeks' time, within a few weeks period, right? So that's why there was some tempering of this enthusiasm, right? I think the Chinese government do want a bull market, but they want a sustained bull market. I think they don't want a Feng Niu, which is a crazy bull. They want a Chang Niu. They want a long bull, right? Rather than we have 40% within a few periods of time, we know when with that kind of environment, only a few hedges, syndicates, or a few gutsy individual investors would benefit. But if the market were to carry on its sustained climb because of policies, right, I think that is what the government actually wants. So I think, right, this is just a healthy correction, right? A lot of the key bellwether stocks that we look at in the internet space, in the financial space, are up very nicely, 20 to 30% from the lows that we saw in September of this year. Okay. Yeah.
So given your view, right, do you think that the current market performance in China and Hong Kong are still dependent on mostly Western fund?
Okay. So, let me put it this way. A lot of Western funds, right, as you can see from the chart I highlighted earlier, maybe I can share that again. I think that will be very helpful in trying to illustrate what I mean. So, okay. So this is the China allocations in mutual funds. So if you look at the dark blue line, is mutual funds, which is unit trust. In actual fact, it's unit trust all over the world, globally, right? You can see at the peak, it was as high as 14%. So which means at its peak, 14% of all mutual funds, AUM in the world, were invested in China. But over the course of the last few years, from 2021 all the way until 2024, that number has been steadily going down, right? 21 to 5%, roughly speaking. And the 5% is one of the lowest that we have ever seen, right? So to answer your question, right, okay, the point is this, right? You can only sell what you have, right? You can only impact the market when you sell what you have. But if you look at the mutual funds positioning, if you only have 5%, right, the impact that this mutual fund globally will have on the market will be very minimal. Because previously, when you have 50%, you sell to 5%, obviously your impact on the market is great because you are selling. The selling pressure is created by you who is selling. But now if you have only 5%, the impact on them on the selling part is actually minimal. But conversely, on the other side of the coin is this. But if they were to buy, if they were to be convinced that the Chinese stimulus is real, the Chinese stimulus will help the economy, what would they do? They will start to buy. And the potential for them to buy up China is huge. Because right now at 5%, they've never been as low as what it has been today. Right? This is the lowest they have been. So my view is they can only buy more. They can only buy more. So that's why my view is from the other perspective, right? Once they start to be convinced, then they will come in, right? And I'm sure we're well aware. A lot of our friends, you can look at I think a lot of 视频, a lot of from TikTok, from social media. I think a lot of people in the world are still not convinced. They are at the sidelines waiting. To me, that's great, right? Because you don't want to be an asset class where everybody loves, right? You want to be an asset class where everybody, a lot of people are not in yet, and yet things are changing. So I think China fits that narrative very well, whereby a lot of selling pressure has already been done and dusted. A lot of selling has already been done. But more importantly, policies are changing, because in places like China, policy will determine the path forward. And if the policies are starting to change, 180 degrees change, and I think that's the right mix or the right criteria for investors to start getting into the position. Okay.
All right. Thanks, Jitun, for sharing your view. So the next question is, how should Malaysian government navigate the Trump's presidency to benefit from China plus one, but not get slapped with tariff? So this is a question by Eugene.
Okay, I think that's an excellent question. I think, I think governments all over the world are all asking themselves the same question. How do you toe the line, right? Right. So the answer, I don't think will be a simple one. And I'm not sure whether I'm smart enough to actually answer that question, because I think it's obviously very complicated. It's a mix of political, it's a mix of trade, it's a mix of economic, mix of financial, right? Factors all rolled into one, right? So to be fair, I don't think anybody have the answer now. Main reason is because there's no policies, right? So right now, whatever Trump has mentioned during his campaign trail, it's easy to talk. It's just mainly talk, right? It's just campaign promises, right? When you are really the president, then you have to weigh all the different stakeholders, right? I think the more important thing is to get into office first, right? If you're not even in the office, what else can you say, right? But I think he has obviously made the very important first step, which is get into office. So the next part is trying to navigate this. I think all over the world, and it's not just Malaysia, right? I'm not trying to avoid the question, but it's not just Malaysia. I think Europeans, right? You can see the European markets as well. You can see the European stocks. They are also responding because they don't they haven't really quite figured out, right? We are their traditional allies, but he might slap on policies on us as well. Same thing for Mexico, same thing for Canada, which is their neighbors, right? Right? Not only are they allies, but they're neighbors as well. And they are slapping tariffs on them, right? So I think there are no easy answers to the question, right? But I think there is a framework. The framework, obviously, you have to be friends with Trump. You have to be friends with the US. You have to be useful to the Americans, right? Useful in whatever sense, right? And then hopefully you can navigate them. But in general, in general, I think China is a different kettle of fish, because China trade surplus with the US is huge, right? Everybody else, I think there is some trade surplus for some countries, but it's not going to be that big, right? So once again, I think it's going to be a very complicated situation, and you probably take us the next few years for us to answer all of that. Okay, Eugene, I know I didn't answer that question to what you probably like, but that's the best we can do at this point in time.
Thanks, Jitun, for sharing your view. Now, we know that there are several technology companies, the big cap, are under antitrust investigation by the FTC, right? So the likes of Google and Alphabet as well. So with Trump presidency in place, what do you think of this kind of investigation on these tech stocks that have monopolistic practices?
Okay, so once again, we don't really know what he's going to do, right? So just to share with you, right? Even TikTok, right? TikTok obviously very sensitive. Technically speaking, Singapore company, Singapore CEO, but yeah, but if you know, right? So So end of the day, if you use TikTok as an example, right? When the Biden administration was trying to ban TikTok, Trump was actually standing on the side of TikTok, right? So whether is it for political reasons or he's trying to get the votes of the younger generation, we don't know, right? So once again, I think it's not so easy to answer that question, right? And bear in mind that his vice president is from the VC world, so he's very very familiar with the technology companies. Same thing for Elon Musk, which is supposed to be his advisor as well. Right? A lot of his close advisors are from the VC world, are from the technology world, right? So we don't really know how he would act, right? So I do think that I think it's a bit too early for us to think about that question. But having said that, in his own words, right, deregulation. He wants to deregulate. He wants to have a smaller government. He wants private enterprise to prosper. But having said that, obviously a lot of these technology companies are huge giants in their own rights, right? So it remains to be seen what he might do. But I can only take hints from the people that he has surrounded himself with, especially in the later part of his campaign trail. So that might give us an indication of where he might go there. Okay.
All right. Now, during the last Trump administration, Malaysian semiconductor companies actually performed well. So the question here is that will our Malaysian tech companies do well this time with all these heavy tariff in Chinese goods?
Okay. So the for me, right, the framework for me to think about this is it's not just the tariff, right? It's who is he tariffing on, because it's all relative, right? So if let's say I'm a country A versus country B producing the same thing, if you tariff country A 20%, country B 0, then obviously country B benefits, right? Because you have the 20% cost advantage, right? But if you tariff everybody 20%, like what he said, then nobody is at a disadvantage, right? Because we're all getting tariff by the same amount anyway, right? So that one doesn't really make sense from an economic point of view, depending on what you're trying to achieve here. So once again, right, but who is he going to tariff? Once again, it's a political question, right? Or how useful are you going to be for the Americans? So once again, I do think that all these questions that we had tonight are very interesting. Are things that we are obviously thinking about, are obviously very relevant at this point in time. But there are no easy answers because, first of all, like what I mentioned earlier, we are looking to crystal ball, right? We don't know what his actual policy is going to be. We only know what his proclamations during his campaign trail were, right? We're trying to extrapolate that and try to predict what might happen in the future, right? So once again, that's the as best we can do for now.
Yeah, we're holding a crystal ball. Right. The next question is from Steve. So our FBM KLCI has been trending down since Trump has won the election and even broke the support of 1,600 points. So our foreign investors have been selling the Malaysians blue chip. So what catalyst can make our KLCI to turn around and start to trend up?
Okay, so I guess it's not just the KLCI. If you look at stock markets all over the world, stock markets have been soft. Stock market has been soft since Trump were elected. Like what I mentioned earlier, right? Trump's promises is very pro-America, pro-protectionism. So for countries, in our parts of the world, in ASEAN, in Asia, most of our countries here are very dependent on exports, on trade, right? So I think anything that is anti-trade will not be good for us, right? Because our economy is obviously very, very, or Asian economies in general are very, very interlinked with global trade. So anything that goes against that is not good. So that's one. The other thing is also in terms of US dollar. So the US dollar, in my opinion, right, the recent weakness has more or less been the US dollar impact. The strength of the US dollar has been quite dramatic, right, over the course of the last few weeks, right? Ever since, like what the question implies, just the last few weeks, because the US dollar has been strengthening. So as a result of that, right, the macro drivers have been felt on the currency side, right? And as a result of that, that will have an impact on the equity side as well, right? So I do think that I know you look at KLC and say that, oh, there's weakness, but if you look at other countries as well, like what we do all over the world, everybody is getting negatively impacted because of the US dollar, because of high interest rates. in the US because of Trump pro-America policies. That is, you know, like what I mentioned earlier, Trump 1.0 is mega, make America great again, probably at the expense of everybody else, right? So I think this is what the market is trying to balance at this point in time. So unfortunately, you know, we are seeing market winners across the board. But
All right.
hopefully, once we get clearer policies, right? Once the cabinet comes together, different stakeholders come together, hopefully the policy will be clearer, right? Will be clearer, more logical, more rational, and then the market will react more appropriately. Okay, yeah. Oh, Shane, over to you.
All right, so let's do this as one last question because time is running out. This question is from Raymond. Now, is China now in a better position in facing the potential trade war compared to the first round by Trump? So do you expect the impact to be lesser compared to the first one?
Okay. Once again, an excellent question by Raymond. So let me once again share my document, my presentation. Can you see this? Okay, let me go back to this slide. So the short answer is yes. I do think that China is more prepared this time around. Why do I say that? So just look at the absolute number. Okay, so there are a few things. Okay, so one is the trade policy happens around here, 2018, right? Obviously, 2019, 2020, there was a bit of COVID problems as well. So the data is a bit dirty because of COVID. But the point I want to highlight to everybody is this, right? Despite the trade policy, right, the absolute exports in terms of real value did increase over the last few years. Okay, it did increase over the last few years. Okay. And as a percentage, it actually went down. So from 15% right now, or from 20% roughly pre the US-China tension, right now it's roughly about 15, right? 15%. So even if you look at this number, right, it's quite clear. The first reaction, right, has been very, very rapid. China plus one. And where's the plus one going? So that's why I just use ASEAN as a indication of where the plus one is. Right? You can see quite clearly, right now, China export to US in ASEAN is almost the same. That doesn't make sense. What? How can ASEAN population be consuming as much as the Americans? That's not possible. So the only logical thing is they're getting to ASEAN, getting processed and move on. Right? So in actual fact, the point I want to highlight is this, that there's a lot of countermeasures that are being implemented that has resulted because of US-China tension, right? The easier part of this reduction of reliance on China has already been done, right? Even Biden's, right? Biden's last act, right, as especially in terms of the tariff, the last round was so minimal that it was roughly about less than 1% of all exports. And obviously Biden had been very aggressive as well. So the point I want to highlight is this, right? There's only so much you can do because end of the day, right, can US produce toys, underwears, Nike shoes, Adidas clothes, t-shirts, all this? Can US actually produce this? Does it make sense for them to insource it back to the US? Right? Does it make sense? Right? Is it even possible? Right? So my view is that a lot of this easy insourcing has already been done. They've done whatever they can. Because bearing in mind, we have one round of Trump, we have one round of Biden. Right now, it's Trump 2.0. This has gone on for at least 2 US presidency. We're going to the third one already. So a lot of easy stuff have already been done. Right? So I do think that the impact, once again, is going to be a lot less this time around. Right? Because of the fact that the first round, it was a shock. People have made changes. This time around, percentage is lower. People have already made changes on the ground. Right? And like I said, because of the structure of the whole manufacturing landscape all over the world, it's not so easy to decrease even further down. So in short, that's my answer. Yeah. Shane, over to you.
All right, thank you so much, Jitun, for sharing with us your view on this question. So thank you everybody for tuning into this webinar brought to you by Bursa Malaysia. So ladies and gentlemen, you just listened to the Chief Executive Officer and Chief Investment Officer of RHB Asset Management Singapore. Thank you so much, Jitun.
Thank you, everybody. Thank you very much for spending time with us tonight.
All right, so for our next webinar, it is titled Pelabuhan Micro di Malaysia, Sikit-sikit Lama-lama Jadi Bukit. So it's happening on this Thursday, 21st November 2024, 8:30 to 10 p.m. So if you want to learn how to do micro investing in Malaysia, you can register for this session as our speaker will share with you more about micro investing. So thank you everybody for tuning in for this session. Hope that you have gained enormous value from this session and learning insights into investing in US, China, and how these differences in terms of policy and the stimulus package can impact Malaysia market as well. So hope to see you guys in our next Bursa webinar. And bye-bye everybody. Have a great rest of the day.